Well, headline inflation rose at its slowest pace in 2 years, up just 4% in May year over year. A good sign for the economy, but is it good enough for the Biden administration? Joining us now is Bharat Ramamurti, White House National Economic Council Deputy Director. Thank you so much for coming back to us on Yahoo Finance. So I want to get first the White House reaction to this. This is largely in line with economists' expectations.
Well, I think it shows that we continue to make strong and steady progress on inflation. As you noted, we're now at the lowest headline rate that we've had in 2 years. We've now had 11 straight months of declining headline inflation. And it shows that, as the president called for a year ago, that we can make this transition from a period of recovery to a period of steady and stable growth while tackling inflation without giving up all of the gains that we're making in the job market. And I think if you take a step back and look at where the economy is overall, the unemployment rate is near a 50-year low. Inflation has declined for 11 straight months. Wages, including real wages, are going up. So it's a very strong picture overall.
And of course, we have to talk about core CPI. I mean, month over month, if we look at the top contributors there, rental, shelter, and then used cars and trucks, they're still having an outsized impact at the moment. Why aren't we seeing more relief in those areas?
Well, look, there is good sign. I think progress ahead on the core front when it comes to housing. As you know, it takes a little bit of time for the rental data to flow through into CPI. And the data that we're looking at, and I know that many external folks are looking at, would predict that the housing component of CPI will be going down in the months to come, which should provide some relief on the core. Now, look, for folks out there who experience inflation on a day-to-day basis, a lot of that is about energy prices, a lot of that is about food prices. And on both of those, we're seeing steady progress. Of course, gas prices are down well more than $1 since their peak over a year ago.
So for people who are, even though they're seeing some of this inflation cooling, still don't seem to be feeling it necessarily when they're at the stores, how much of that is perhaps about greedflation, some of these prices staying elevated when they don't have to, versus, look, seeing that consumers are still willing to spend this money at the same time?
Well, I think the retail spending, consumer spending figures show that the American consumer feels pretty well about their financial situation. As long as people feel comfortable continuing to spend, that's going to continue to boost economic growth and continue to prompt more business investment. I think if you take a step back and look at where the American consumer is overall, real wages are up, as I said, over the last year, and real wages are up particularly so for people in the bottom half of the income spectrum, folks who really need that extra income after a lot of wage stagnation over the last couple of decades. So we think overall the typical American family, the typical American consumer is doing very well, and that's helping power our economic growth forward.
And in terms of the concerns that the average American has, I mean, there's the poll for June from Reuters and Ipsos. It shows the economy, unemployment and jobs remain their top concerns. Where do you see the economy headed from here then, if these current trends continue?
Well, I think that we're well positioned right now. Obviously, we have an unemployment rate that's well below 4%. It's been under 4% for 16 months now. We have inflation obviously trending in the right direction with a lot of inflation and deflation in the pipeline, according to what we're seeing. And we're continuing to see the fundamentals of economic growth remain in strong position, business investment, consumer spending, and so on. Remember, a lot of what the president passed into law in his first 2 years in office were big incentives for additional investment in the United States. And now we are seeing the private sector respond to that with nearly $500 billion worth of private investment pledged for things like new clean energy production, new semiconductor manufacturing, bringing good jobs, good paying jobs to communities all across the United States. And in many cases, those jobs, that investment is still in the pipeline and will be hitting the economy over the next several months. So overall, we think the economy is in very strong shape and well equipped to weather any other headwinds we have to deal with over the next several months.
Now, that's tough, though, because even though you're seeing these economic improvements, it's not being reflected in President Biden's approval rating, at least according to this survey. 54% of Americans disapprove of how President Biden is handling his job, and that's unchanged from May. And then when you think of the debt default that was narrowly avoided as well, and the budget battles that are still ahead, what are your thoughts on how the American people should really be looking at this when they think of even some of these GOP proposals for what some of the cuts should be in terms of the budget?
I think it's a simple question when it comes to presidents. Are you better off than you were when the president took office? If you look back to the situation we had in January of 2021, we had developed a vaccine but had no plan in place in the previous administration to administer that vaccine. The unemployment rate was well over 6%. I remember on the second day that the president was in office, we got initial unemployment claims showing that 900,000 people had filed for unemployment just that week. And you look at where we are now with the unemployment rate near a 50-year low, with the labor force participation rate at its highest level in 20 years for the working age population, with $500 billion worth of private investment in the pipeline for good paying jobs here in the United States. We feel confident that as the economic data continues to roll in, as the economy continues to make progress over the next several months, that people will look back and realize that the president's economic stewardship through this extremely challenging time has been very good and has put us in a stronger position than basically any other leading economy.
And certainly seeing that inflation number starting to cool, hopefully will translate into some relief for everyone. A big thank you there to Bharat Ramamurti, White House National Economic Council Deputy Director. Thank you so much.